But what are the regulatory imperatives if you're operating in a highly regulated financial services, including securities market? That's what I'm discussing next with Johnson Chukwu, who is the CEO and the Cowry Asset Management and an investment expert. Good evening, Johnson. Good to have you on the program. Let's enjoy this evening together by discussing this very important situation, looking at some of these regulatory actions coming through the fintech, so that before we get the wrong side of ourselves, what do you think the regulatory imperatives are for fintech operators looking to do business within the highly regulated financial and securities market space?
Thank you, Bosse, for having me. You know, the challenge we are dealing with is a conflict between innovation and regulation. And as we know, most instances, innovation will go ahead of regulation. It is what is innovated, what is created by regulators will now learn to understand and try to regulate. So those in the fintech industry are creating new concepts, new services, new products almost on a minute basis. And the regulators are struggling to catch up with the advancement in knowledge, in technology. And unfortunately, if you try to overregulate the fintech industry, what you end up doing is stifle innovation. So the regulators have to reach a balance. And for the fintech industry operators, they need to have a business arm that is focused on engaging the regulator. One, bringing to the regulator information on the advancement and exposing the level of technological configuration to the regulators so that there won't be issues related to the regulator not understanding what is going on and the regulators now trying to stamp on their feet on advancement because they did not understand what advancement is all about.
Yeah, so I understand. Let's take this a little bit back. You operate in the market, and I have the privilege of being in the market with you over the last few decades. The financial securities market is highly regulated. For you brokerage firms, for example, there are rules by the stock exchange back then, now the NGX and the SEC, for example, in terms of how the volume of shares you can trade on a particular day to move price. For example, the stock exchange will ask you to step forward to examine your books if there are cross deals and what have you. There are a whole lot of issues you need to deal with in terms of how you deal with investors' money, for example, the whole issue about compliance and all of that. Now, so if you're a fintech company, which is basically a technology company, and you want to onboard these services, which is technology, into a market that has to do with people's pensions, asset management, and funds, that's a whole different ballgame, isn't it? Are we all getting this conversation right here?
Yes, clearly, if you look at what is going on, like you rightly said, pointed out, the financial services industry is highly regulated. It involves one, individual wealth, two, national wealth, three, economic security, and then household security, economic security. So you have to deal with that. And as it stands today, operators, the brick and mortar businesses like ours that are now trying to expand our footsteps through the fintech industry have to abide by a series of regulations. You have mentioned some of the regulators, SEC, NGS, the central bank in some instances. And the fact is that because the business we do is at the heart of individual wealth, and individual wealth has to do with national wealth. And when wealth is abused or is stolen, it could lead to economic and social crisis, as we know. So there is a compelling need to make sure that operators in that industry conform to certain minimum standards and that their orderliness or what they call financial system stability that is sustained in any economy. That's one thing. But then the financial industry operators, such as the fintech industry operators who are coming into the financial services industry, are trying to provide services in a faster, smoother, and more friendly or more efficient manner as to bypass some of the checks and balances that have been built into place by the existing regulators. So, and that's where the conflict comes in, because the regulators have to find a way to understand and moderate what the fintech industry operators are doing so that they don't injure the financial system stability that is the core of regulation.
So today, for example, the central bank issued a cautionary note to microfinance banks and reminded them that they are not to do foreign exchange transactions or wholesale banking and so on. So this is how it gets about when you begin to have what you call fintech or startups in that space dipping their hands into certain transactions or activities. So how should the regulators balance technological disruption and innovation on one hand and regulation, compliance, and very strict financial market discipline that needs to be brought to bear here? And that is it, market discipline. How do we explain, or would you explain, market discipline to these young fintech startups?
Well, I will start by saying it's actually a difficult thing to explain to them because in the first place, the focus is on providing services. And what they look at is once they see a need, they try to create a solution to that need. The solution may not have taken into cognizance the underlying regulatory need to safeguard the financial system, to safeguard individual wealth, to ensure the integrity of the entire financial system. So sometimes these innovative solutions tend to bypass some of these regulatory imperatives. But what I would say is that for an operator in the financial services industry, one thing is that we can't run away from the advancements in technology. Two, like I said earlier, the fintech operators need to now have what they may call a regulatory or government relationship unit so that their creations or their innovations are exposed to the regulators. If you recall, SEC just came up with a exposure that will allow it to license sub-brokers, fintech sub-brokers. Because for them to do that, they need to understand the platform on which the fintech sub-brokers are operating. They need to understand the configuration of their system. They need to understand their database management system. They need to understand their storage facilities, whether they are storing in cloud, their archive retrieval facilities, so that if anything goes wrong, you can actually trace and track what went wrong and possibly recover that. These are some of the things that the fintech operators in their course of innovation may not have taken into cognizance. But if they engage the regulators, it will make it easy for us to have a handshake, an interface between the regulators and the innovators or the financial fintech companies, so that their creations or their innovations are exposed to regulatory format so that there is no breach of the financial system integrity.
Sticking very quickly to wrap up the conversation around market discipline. Part of market discipline, Johnson, from experience, is that sanctions are meted out sometimes in financial terms by the SEC, by the central bank, for the banks and others. Do you think the fintech startups in Nigeria understand that language, that they could be sanctioned in financial terms? Perhaps sometimes, like in the case of the central bank, getting a court order for 180 days to freeze the bank accounts of about 6 fintech. I'm sure it has happened to a number of stockbroking firms in the past and others as well in the industry.
Well, even if they don't understand that, you just mentioned the case of the freezing of accounts of 5 of the fintech operators. So basically, what may happen that they will understand that through this shock therapy that the central bank has adopted. But I think central bank should go beyond the shock therapy. Central bank should also consider the option that SEC has adopted to engage the fintech industries, to ask them to bring their platforms for understanding and regulation so that we do not stifle innovation, well as we maintain financial system stability. We make sure that we protect the wealth of citizens as well as at the same time encourage innovation. So they may have been shocked by the central bank getting court orders to freeze their accounts. But subsequently, once they come under regulation, the central bank, they will know the do's and don'ts, and they will largely try to build their software applications to make sure they conform with the do's and don'ts.
Johnson Chukwu, licensed trader and CEO at Cowry Asset Management. Thank you so much for your time. Let's leave it there for tonight. Thanks for your insight. Enjoy the rest of your weekend.